Stock futures opened flat to slightly higher Tuesday evening after a market sell-off during the regular trading day. Treasury Secretary Yellen began the day by warning of a biblical apocalypse occurring if Republicans don't vote to increase the debt limit. Never mind that Democrats have all the votes to do it on their own without the Republicans. And for the rest of her testimony, Yellen was trying to explain that soaring prices of absolutely everything, no, that's not inflation. With that clue, Treasury yields continued their sharp rise, being fueled by the debt ceiling and government funding bumbles. And the rise in yields and higher borrowing costs hammered growth in technology stocks. Now, in my humble opinion, there will likely be a short shutdown of the government Friday night going into the weekend. And then maybe we'll see some kind of resolution to get the government running again, but don't hold your breath. And with that, let's take a look at the charts. And today we're going to take a look at one quick chart, which is the 6-month daily on the SPDR's Dow Jones Industrial Average ETF, and the symbol is DIA. Now, we haven't looked at the Dow in such a long time. I figured might as well do it here. Now, we do have a generally decent uptrend from this April bottom here, moving all the way up, even including what we're going through right now. But we went all the way down to this level here. Up here, we tangled with the 50 and the 20 EMAs and then came right on back down. So I wouldn't be surprised with some more softness into the weekend and maybe some sideways trading for the most part. And the reason I say that is looking at the oscillators. Volume's not going to tell you too much as usual, but here in the MAC you can see that from this point here to this point here was a relatively wide separation, and oftentimes the stock market can fail in a move on up where there's so much distance that needs to be made up. Here it was successful, but we're a little bit lower here than we were back here, and you can see that this general move is like a topping process we've talked about before in the other indices, but we're definitely lower here than we were back here, so I think that made it a little bit more difficult to make up this distance, and it failed. And at least today we're on our way down, but I don't think we're too far down. You can see here in the histogram that maximum negativity back here only a few days ago, and we're only at this point here. But we'll see going into the weekend. Things can turn on a dime. But here in the price rate of change, it looks like the fast line has already climbed up and above the slow line, just coming back down through minimally. It is well below that zero line, so there is definitely some weakness, but I think we're going to try a bottoming process here, which is going to take us into next week, probably for sure, and maybe after, depending upon what happens over the weekend. Here in the relative strength, we're at a moderately weak 39.80. We see that we tried to bottom here in the middle of the month, coming on up here, and it still may progress depending upon how far this move heads on down. But I still think that there are some of these oscillators giving us a few signs of some firmness in the market, regardless of today, Tuesday. Here in the stochastics, pretty much the same thing. And again, into the Williams, you can see that maximum negativity here early to mid-September. So right up here, this sign or oscillator is telling us that things are improving regardless of what happened in the market during trading session on Tuesday. Back up to the price chart, you can see that this downtrend here is not nearly as low, but again, we still have the rest of the week, so anything can happen. But simply because of that separation of the fast line and the slow line of the MAC, one more look at that. And then, of course, the reflection and downturn here, I think we still have more time to wade before this market does start turning up higher in a much stronger fashion. There's going to be some weakness, and we're going to move sideways for the most part, but I think things are improving, and we will head up. And for today, that's ChewDog Charts. Thank you.